And joining us now here on the show as we talk about the market trade, wrapping up 2022, looking ahead to 2023 and watching some of the various storylines that are either new or still out there in this market trade and the ag economy and the entire agriculture industry. We're welcoming in our good friend Chad Hart, economist at Iowa State University. Chad, always good to catch up with you, sir. Merry Christmas. Happy New Year to you. Hope you're doing well.
Merry Christmas and Happy New Year to you as well, Jesse. Doing well.
Yeah, good to hear. Thanks for joining us, Chad. Let's dive in. And I think just to start, a good spot for us to start is looking at markets here in 2022. It's been an interesting year, obviously. A lot of volatility, a lot of news items, a lot of geopolitical issues out there, weather. There's been so many different factors as you kind of stop and pause and look back at 2022. What stands out to you here? What should we have learned from this year watching the market trade?
Well, I'll describe it this way. If we could sort of freeze where we're at today, I think a lot of farmers and ranchers across the country would be happy. Yes, we've seen tremendous amount of volatility in a lot of our agricultural markets, but for the most part, that volatility has worked within farmers' favors. We've seen incredibly strong prices sort of across the board. Yes, our costs are rising, but there's still a lot of profit margin to be had out there across our commodity complex here. And so we're going into 2023 in actually some really good spots as we look out there in terms of pricing and marketing. I think the challenges as we look forward will be looking at some of our production challenges as we look forward. The drought that has continued for the last basically 2.5 to 3 years. The challenge of trying to reestablish or rebuild the cattle herd as we're looking forward during, the next couple of years as we're looking out there. And then trying to, let's call it, find the floor underneath our international demand out there. Because when we look here at the tail end of 2022, domestic demand for our products remains incredibly robust. It's the international demand where we may be seeing some struggles as we look deeper into the data.
Well, looking at that data, Chad, and looking at that export demand, I'm glad you brought that up because I think to me, that's maybe one of the single biggest issues heading into 2023. China, obviously, that's a big topic of conversation, has been for months, looking at their demand, the COVID issues they have, their relationship with Brazil, the reshuffling of the deck chair, so to speak. That seems to me like that could be maybe the single biggest issue that we could at least see on the horizon heading into 2023, Chad.
Well, and you mentioned China, and I'm going to say that's the biggest deck chair that's moving around. But I want to point out that's not the only one as well. So what we're seeing out of China is a fairly strong pullback across many of our commodities when it comes to those international purchases, and this is sort of let's call it the boomerang effect of the phase one trade deal. When you think about the surge that we saw out of China through 2020 and 2021, a lot of that was written in because of the phase one trade deal. Now that we're here in 2022, looking forward into 2023, the idea is that deal no longer holds for us. So we don't have those sort of guaranteed sales. And we're seeing China pull back and redistribute those purchases across the globe. And yeah, Brazil has been a major um, benefactor of that as we're looking down the line. But I want to point out that, what we're seeing in China is not the only place where we're seeing that pullback. In fact, when we look at some of our commodities, and especially here, I'll probably pick on corn and pork as we're looking forward into 2023. We've seen just a general pullback across the globe where we're seeing concerns about the global economy and how that has, started to wear down on those international customers, whether I'm looking at Southeast Asia, into North Africa, or across Latin America. We're seeing in general this shrinkage of demand as we look outside the US.
Well, and with corn too, specifically, I mean, obviously, we look at prices on the board right now; they're still holding fairly good levels for producers to look at marketing here heading into next year. If they're looking to market old crop right now, or even new crop 23, 24 in some cases, because as you mentioned, some of that demand waning, the cost of inputs going higher. I mean, there's so many factors here, but I remember one of the first times I heard you speak it was, I believe, during like 2013, 14, one of the last big cycles we saw. And the biggest thing you pointed out is that for every cycle that goes up, we come down. And
Yep.
I feel like we're at that point to where we're at the top of this cycle. And now the question is, when do we come down, Chad? And I feel like it's going to be sooner than later.
Well, I'm gonna argue we're already coming down in a certain sense and have been for a little bit here, but it's a different way than what we saw in 2013. When you think back to 2012, 2013, what we saw were incredibly strong price and cost swings. But the idea is we saw, rapid prices up and rapid prices down. I think this time around we saw the rapid escalation of prices, but in this case, I think we're going to see a, let's call it, a slower erosion within prices over time, which means costs are going to remain higher longer than they did back in the previous downturn. And so I think that's the big difference as we're looking here, because when I think back to 2013 and the big fall there, it was a case of demand had already pulled back and then supplies just vastly exceeded that. We're not at that stage right now. As we see right now, yeah, international demand's been shrinking, but let's face it, production has been cut as well.
Mhm.
And when I'm looking here, they seem to be more in, if you will, in better balance, and it's helping hold our prices at these higher levels. But that profit margin is getting squeezed as we move forward here and will continue to get smaller and smaller as we look further out into the future.
Well, and especially on the corn side, the supply is very tight still. Globally, here in the US, the supply is very tight. And obviously, we're watching South America to see what kind of a crop they grow in Brazil, Argentina, and then obviously, US crop here in the spring to see if we can replenish some of that supply. And then that's going to tie into the demand picture as well. But to your point, if corn can hold here in the upper fives, low sixes, that's a pretty solid level here to market a crop if you're smart about it and can work the balance sheet with your inputs going into next year, Chad.
Yep. And I think that's the big key here again, is that when we're looking here, just like we talked about in 2013, 14, it is a matter of managing that margin. And in this case, I think, and I've seen a lot of market analysts over the past, especially 6 months, talking much more about, pairing up sales with input purchases and trying to maintain or lock in that profit margin with every move that we're making as we're looking forward here, because we recognize that, hey, those things, those profit margins have been slipping, especially as we compare to summertime right now. We do see some worries about, like I say, international demand as we look out there, and we expect those to be long lasting, at least here over the next year or so. And so that means you have concerns about prices continuing to work their way lower, and therefore, yeah, keeping an eye on the price, the profit that you get from that crop, is crucial as we look forward in 2023.
Chad, let's talk this soybean market and the soy complex. I get a feeling as I talk to some traders and even some farmers that they're a little bulled up in soybeans here with all the potential demand with renewable diesel, with crush plants. You think about the expansion of crush plants here in the U.S., but it still feels like it's a few years off. Yet it seems like these markets just got a little bit of a bullish tone where we're getting, higher highs and lower lows here towards the end of 2022. We're kind of shrinking that narrow window, testing that resistance around $15 beans. I don't know. I get this sentiment from some folks that they're still bullish this soy complex going into next year, even though some of that demand on the horizon is not going to be here just quite yet.
Yeah, I think that's going to be the challenge here. Is we see a wave of coming. It's again a question of how big it will be, and how do you need to prepare for that? I think the reason for, let's call it, that near term bullishness right now is if we look back over the just this month, within December, we saw, the early half of the month was basically driven by meal demand. We saw a nice surge there, and we're holding on to prices as we end the year. And now here at the very tail end of the month, we're seeing oil sort of pick up where meal left off. And so there is enough demand out there to, yeah, inspire a little near-term bullishness here, but we also have to wonder, will we get soybean production ratcheting up before some of that renewable diesel production gets online? And so, there's going to be a bumpy ride here as we try to again keep that balance between supply and demand here, because you know the timing of these plants, when, how many will be built, when will they come online, and will they be running at full capacity if they are built, are major issues that will determine how big a splash that renewable diesel push has truly on soybean demand.
Well, and a lot of folks are comparing this to the original ethanol expansion in the mid to early 2000s. Will it be the same? Will it be slightly different? Lower to your point. I think that remains to be seen if it'll be as big of an explosion, as ethanol was here for the corn market. Will it be the same for the soybean market? I agree with you. I think that just remains to be seen on some of those factors, Chad.
Well, I think it does too, but I will say, that I would sort of agree that it's similar in the feel to what we saw with ethanol. I'd say the difference here, though, is with ethanol, it sort of caught a lot of the market off guard. Whereas this move, no, the market is fully anticipating something here. And in a certain sense, I could argue that a lot of the price movement that's expected from this move, it's already somewhat baked into the market now.
Well, Chad, as well, watching South America, circling back to that, their crop right now, weather issues in Argentina, yet very good weather in Brazil as we stand here at the end of the year. And so, a lot of talk about a record crop still in Brazil that could probably offset some of that Argentine production if they continue to have problems. And that's obviously something weighing on the markets here as it does every year this time of year. What's your thoughts on that South American picture as it stands here at the end of 2022 right now?
Well, that's the deal. I'd agree with your general assessment there on when we're looking at the weather patterns. Yeah, it's definitely showing that. Yeah, if we're looking for weakness out of that South American crop, it's Argentina where we're going to find that. But as we look at Brazil, that has been the juggernaut, if you will, of production over the past couple of years, especially as we're looking at corn and soybeans. The idea is that we continue to see more second crop corn coming out of Brazil, along with them continuing to ratchet up soybean production as we're looking there. And so we're going to see a lot more competition out of Brazil, I think, over the coming year, year and a half, as we're looking at both our big crop markets here. And that's leading to some of the, let's call it the export challenges we're facing right now. Part of the problem we're having here is not just the general economic conditions worldwide, but when you think about US prices relative to other places around the globe, normally, in this time of year, we tend to be one of the lower price places that you can shop, if you will, worldwide. We're not this year because of the sort of production problems that we had up here with the drought, our own drought here. And that has led to more losses of those export sales at a time of year when we're used to really dominating that export picture.
Chad, I want to give us enough time for livestock, but I do want to mention wheat real briefly. I feel like the wheat market, we finally came down and found a price to where we're a little more competitive on the world market. And that's helped give us some support in wheat here as we wrap up the year. Is that your kind of general thought there as well?
Well, that's the deal. We come down enough. Yeah, we're getting some support there. I'm also going to say that, when we look at the weather conditions, it continues to be a concern, especially as we look at this, this end of year storm bringing in, some snow, but the bitter, bitter cold. And there are some worries that a wheat crop that was already struggling physically going into the winter season will take, if you will, it'll have a rougher time dealing with this storm as it blows through the U.S.
Yeah, I think that's definitely something to watch here as we get into the end of the year and the new year. Chad, let's talk livestock. You mentioned some cattle thoughts earlier, and everyone I feel like has had their bullhorns on this cattle market for months now. We just haven't quite seen that move yet. This big move anyway that we've expected. I mean, talk to me about what you're seeing in this cattle market here again as we wrap up the year. Let's dive in a little more. I mean, should we all still have our bullhorns on as this herd continues to contract? I mean, what's your thoughts there?
Well, I'll put it this way. We all know we're gonna need our bullhorns on at some time. It's again, it's sort of like the biofuel discussion with soybeans. It's a matter of when. And I think in this case, with the cattle market, we're sort of waiting for the time when we can begin to put those animals back out there on the western pastures. And we know now is not the time. And we wonder as we look into 2023, when will the weather pattern change enough that we can start to rebuild those herds out west? We know the demand is there. Domestic demand remains very strong when we're looking at our meat sector, especially on the beef side. Internationally, beef sales continue to remain fairly robust there as well. So we know that that demand is out there, but it's more a matter of can we start to truly bring those numbers back up again? And right now, the short-term answer is no. And so that's why we're not seeing, let's call it the strong run up in prices yet. There's another
Yeah.
piece to that as well, I should mention. When we think back to this year, one of the reasons that we're looking at a smaller 2023 cattle herd is because we have, if you will, forward marketed a fair number of animals. So animals that would have been out there in 2023, no, they're already in the meat case here in 2022. So we've expanded production here really quickly. That's holding down prices in the short term, but will mean higher prices as we look out there in the longer term.
Well, and something I've noticed too here at the end of the year, those Packer margins were getting a little rough for Packers. They've been improving those margins here towards the end of the year. So one has to wonder if, what that would do for the setup here in this first quarter of 23. Because obviously, Packer margins, that's going to be a big part of the story, Chad. They got to be making their money.
Oh yeah, well they're going to be making their money, but when I look at raising cattle across the U.S. as well, no, we're there's profit to be had out there, but it's also the case of is there enough profit to let's call it incentivize me to go out there and start to build that herd back up.
Mhm.
And what I'm hearing from a lot of ranchers is, yeah, I've got profit here today. I want to maintain the herd that I've got, but I'm not looking to grow yet because I need my pasture to heal up.
Yeah.
I need more capacity, if you will, to raise those animals. And so I'm not looking to expand until I know I've got the pasture to do it with.
How about that hog market? Any thoughts there? I know it's been a wild, volatile ride in 2022, and even this fourth quarter has been a wild ride in the hog market. Any thoughts as you talk with producers and look at that side of the trade?
Well, I was gonna say where the cattle herd is, shrinking and but looking to expand here, somewhat quickly once we can. The hog herd is sort of trying to hold steady, if you will. The idea is that we're not seeing a lot of action to either contract or expand. Pricing, as you say, has been volatile, but holding us, I would argue, around break even. The big challenges for the hog industry have been the higher feed cost as they've worked through the year, and they don't see a lot of relief coming towards them in 2023. So I think, within the hogs cycle and what I'm seeing, in the marketplaces, we're looking at, let's call it slowly rising prices as we work through 2023 to match sort of the steady production that we expect to see from the industry.
Well, Chad, great thoughts. Before we run out of time, I'll leave it open for you. The floor is yours. I know we didn't touch on the macros or anything like that, but again, floor is yours. Any final thoughts you'd want to share with us here today before we wrap it up?
Well, like I say, when I'm looking at 2023, what I'm seeing is we're going to start the year in a fairly good spot across the ag complex, where we've got strong prices sort of across the board. The idea is domestic demand, like I say, remains very strong, and it's the challenge of helping find that international, purchasing power as we look out there. I think as we look at going forward into 2023, it is probably a time of tightening margins, but still positive margins as we look out there. And that's sort of been the storyline as we think back. 2020 is when we saw those margins really open up. 21, they were fantastic. 22, we've seen a bit of a pullback there. And I'm going to argue 23, we're pulling back a bit more. So, like I say, this sort of cycle is different than what we went through 10 years ago in that I think that there's more support to maintain the higher prices for a longer period of time than we saw with the last cycle across agriculture.
Well, a lot of things to consider and watch for as we enter a new year. And as always, we appreciate the time. And with that, I'll wish you again a Merry Christmas and a Happy New Year. Chad Hart with Iowa State University. Thank you, sir. And we'll talk to you again real soon.
Thank you, Jesse.